The energy transition is alive and well on the stock market, even despite Trump. Let's take a closer look. Since Trump, we've repeatedly read about headwinds and problems for the energy transition, electromobility, and so on. And in the US in 2025, there is already data for the first half of the year. New investments in the energy transition sector have actually declined. But in the chart where you see those colorful columns, it's just that small blue section at the top. That part has actually decreased in the first half of the year since Trump took office. But if we look at global new investments in the energy transition sector, so photovoltaics, wind power, and so on, you can see that even in the first half of 2025, they're at a new all-time high. Almost 400 billion were invested in this sector in the first half of the year. And the reason why is easy to understand. Thanks to technological progress, for example, in electricity generation, costs are continuously going down. You can see it quite clearly in the chart. In this example, it compares electricity generation costs for, on the left side, alternative production methods, photovoltaics, onshore wind power, offshore wind power, and so on, with conventional electricity production methods like gas, coal, and all the way to the right, nuclear power. And what's remarkable, these are data from the German Fraunhofer Institute for the location Germany. That means even in Germany, the cost of electricity production, even in a version with storage, is now below what it costs to produce electricity from newly built conventional power plants. The investment costs have already been taken into account everywhere. So what does that mean for countries where, for example, there is significantly more sun or wind? This means the energy transition and all related sectors have become a global self-starter solely due to technological progress and increasing cost advantages. Trump can't change that. And how does the stock market see it? Surprisingly, quite similarly over the past year. You can see it in the chart. On the one hand, in blue, we have the development, the performance of the global stock market. In white, the development of technology stocks, US technology stocks, Nasdaq, the place to be in recent quarters. And in yellow, the performance of stocks from the global energy transition sector. And what's interesting for future performance expectations, this comeback of stocks from the energy transition sector, with everything that goes with it, is far from being exhausted. You can see this clearly when you look at the same performance development since 2020, so over a much longer period, because there you can see how much the sentiment on the stock markets for such themes can fluctuate, and with it, the performance as well. Yellow line again, the performance of stocks from the global energy transition sector. You can see very clearly. Starting in 2020, there was extreme euphoria for this topic. This stock index doubled in a very short time, but as a result, it became very, very expensive. When we looked at valuations back then, these companies were even at their peak more expensive than Nasdaq technology companies. That might be a bit of an exaggeration. What followed after this euphoria was years of sobering and disappointment. You can see the yellow line continuously going down over the years. The performance of energy transition stocks was worse than the broader market for years, not to mention compared to technology stocks. About a year ago, stocks from the energy transition sector were massively lagging behind. Yellow line at the very bottom, massive underperformance. If you looked at valuations back then, energy transition stocks were classically a growth theme, still for many, many years, even valued more cheaply than the broader market, especially compared to the extremely expensive technology stocks like those represented in the Nasdaq, for example. So what has been happening since 2025? The gap is obviously starting to close again, albeit slowly. As previously shown, we've already seen a year of outperformance from stocks in the energy transition sector. But as you can also see in the chart, we're still far from excessive levels. When you take a close look at current valuations, you'll see that globally, stocks from the energy transition sector are still valued at significantly more attractive discounts than the broad global stock market, even though energy transition stocks have a substantially higher amount of growth potential, and they're valued far below traditional high-growth technology stocks like those in the Nasdaq. What do we take away from this? Trump alone isn't enough to short-circuit the global energy transition. The technological progress is simply enormous. Secondly, the stock market already jumped on this topic last year. And thirdly, stocks from the energy transition sector are still so attractively valued that there's plenty of room for them to catch up in terms of performance over the coming years. So be smart when it comes to energy, and to make sure you don't miss our next segment, it's best to subscribe, like, and see you next time.